Hello traders, and welcome to my session on why the butterfly. I'm going to dive into the magnificent 7 reasons why you need this trade in your options trading arsenal. The butterfly isn't just a trade, it's a weaponized strategy that's wielded by seasoned professionals like myself for years. Before I dig into the butterfly though, let me tell you just a little bit about myself. I'm a trader of 30 plus years, and over the last 10 years, I've assisted many options trading companies such as Option Alpha, Option Trader's Assistant, Aeromir, Online Trading Academy, and Option Strat with trader coaching and education. And most recently, at the end of 2022, I launched my own education site and alert service. So that's enough about me. Let's get into why the butterfly is so revered amongst options and income traders, more so than condors, calendars, diagonals, and verticals. So let's start with a deeper dive to understand why. So let's look at magnificent reason number 1. Probably the number 1 reason is time is your ally. We harness the power of Theta Decay to relentlessly drain value from the options that you've sold in the butterfly, putting time firmly on your side. Throughout these various sessions, I'm going to be using one of my favorite tools to illustrate a number of these points, and that is Option Strat. It's an excellent modeling tool, and you're going to see why as I go through these various sessions. The first thing I want you to note in the butterfly is that at the short strikes here are 507 strikes where we are selling a call at 507 and a put at 507, which is close to at the money here. Our market is moving just a little bit. We have a maximum risk in this case of $86. We have a maximum reward of $613. That represents the peak of this tent right here. So the key is we have an excellent reward to risk ratio in this trade. Our break-evens here are all the way out at 500.87 and 513.13. Now, why is the butterfly so strong in this area? It's because these options here that we are selling at or very close to the money. In doing this, that's when you get the absolute most amount of money for those options. Just to give you an example, if I come in and look at the 507 put in this case, I'm selling that for $813, $8.13. Now, let me look at a comparable trade, the Iron Condor, and show you how this varies. Remember our break-evens here, right around 500 and 513. So we have essentially the same break-evens, 500 and 513. Our risk is a little less here, but also look at how much lower our potential reward is in this trade. That's because the options that we're selling are not at the money. So I'm only getting, in this case, $7.38 for this one, and I'm getting $6.20 for this one. So if we come back to this trade, where I'm getting $8.18 and $10, I'm getting significantly more because I'm selling these at the money. My wings are at the same location. So again, the key to a butterfly is being able to sell the short strikes that have the most value, and then we wait for those short strikes to decay. At the start of this trade, this is where we're at. We're right here. If I were to enter this trade today, and then decay will happen over time. As days click by, my P&L, this is what we call T0 line, will mound up to higher and higher levels of profit. So Theta Decay is the number 1 top reason why I like a butterfly. Okay, so let's look at the second reason I really like butterflies, and that is the flat T0 line. So the T0 line, when we come to our modeling, is this green line right here. It goes from green to red, and this shows what the value of the position is going to be if the market goes up or down a certain amount. As we can see here, in this particular case, the market can sell off way, way down here, and I still am not suffering much of an impact of loss in the early days of this trade. Likewise, the market can go up significantly with limited loss on the trade. So I've got a very wide range that the market can chop back and forth without this trade being impacted much. And ultimately, what I'm looking to have happen, of course, is I'm looking to have this trade decay over time. I'm going to take this down to about 4 days. And we can see as I get about 4 days before expiration, this trade is up about $220 in profit. Let's take a look at the exact same Condor trade. So as I get 4 days to expiration, this trade is up about $80. Likewise, if I take a look at the T0 line, this T0 line tends to drop off faster on both sides than the butterfly trade does if I take it back to the start of this trade. Again, this line tends to be much, much flatter in a butterfly than it is in the Condor, giving me a much wider range to operate within. So the third reason I really like butterflies is they are highly versatile and customizable. I can adapt a butterfly to virtually any market condition once I understand the basics of the fly. For example, if I think our market might be going up from here, we're currently trading at 506 in the SPY, and I want to position a trade so that it does not have any upside risk, I can simply give myself a lesser spread to the upside. So if the market rips up, this trade has no risk to the upside whatsoever. No risk of loss, I should say. Likewise, if I want to set up my butterfly to be able to capitalize on a down move, if I think there's apt to be a down move in the market and I don't want to carry any risk of loss to the downside, I can have that side of the butterfly be skewed in a way that no matter what happens, if our market tanks all the way down to zero, I'm at least locking in $47 in profit in this trade. And of course, if I am under the tent, Theta Decay is really working in my favor and I can end up with a much higher gain. So the ability to build a butterfly to virtually any market condition I might envision is a key aspect of butterfly trading. So what is the fourth reason that I really like butterflies? Well, at the end of the day, they're very simple and easy to adjust. For example, if my market starts moving to the downside and I have a little bit of fear here of ending up in this loss, all I need to do is to sell one of my options and roll in a leg. So I simply sell the 500 in this case, roll it in to say a 502, and I end up with limited to no downside risk. And the same is true, of course, of the upside. So it's simply just doing a vertical. I can sell this one and then buy something a little closer in to reduce this risk. I can also do the opposite. I could potentially even turn this into a Condor. So I could come in and buy back one of these short strikes and move it to a different location, achieving a similar objective. So again, the butterfly is highly versatile, highly adjustable, just by using verticals, which makes everything very, very simple and easy to follow. So the fifth great reason I like butterflies is they're a little bit of what I would call a low maintenance marvel. If you put these trades on a ways out, anywhere from 30 days up to 60, 70 days out, this one happens to be 53 days out, and we come and roll this back to the start of the trade, so this is what the trade would look like at the start, we can see there's a very, very wide range. This market can drop 2, 3, 4%, 5%, or run up a significant percent without much impact on this trade. During the first half of the trade's life, 36 days into this trade, we can see we still have a very, very wide range. on, in this case, it's the S&P. So the nice thing again about these trades is they can age gracefully without a lot of attention being required to them. If you have a 5% drawdown or a 5% move up in a short period of time, yes, it may require some attention. But under normal circumstances, unless there's a massive move, you have a very wide range that you can play in with this trade and not have to pay attention to it. And certainly in only the rarest of instances would you ever have to come in and make a trade on a specific day, specifically earlier in the trade. More often than not, if you don't adjust it today, you don't adjust it tomorrow, etc., particularly in the first half of the trade, it's a non-issue. Now, the sixth reason that I really like butterflies is they are extremely capital efficient. So in this example, I'm showing a trade in the SPX, which is my personal main trading vehicle. And for $535 in risk, in the case of a max loss, if the market were to tank or the market were to rip up on me, and I didn't adjust those along the way, for $535, I have the potential to gain $4,400 if I were to peg this at expiration. I need to stress that is not my goal with these. That is never my goal with these. That said, what is my goal is to ride these for a short period of time. So if I bring this back to entry here today, I might simply ride this trade for about half of its duration or so. This is a 53-day trade. So if we come out about 25, 30 days, somewhere in that general range, this trade should be up $400-500, which is almost 100% on my potential max risk. So for those reasons, I really like this trade. It's highly capital efficient. So my number 7 reason that I love butterflies is I call them the hedge fund heroes. And what I mean by that is when volatility in the market is higher, when you have a sell-off and there's panic and fear in the streets, these trades can be put on for much less initial funding. The example I showed you prior to this showed that I would have had to have spent roughly $550 and I was going to have about a $4,500 max profit. In this particular case, if volatility is higher, I could get into a trade like this for much, much less risk, which would allow me either to trade smaller and have comparable rewards, or I could size up my trade. Maybe I do a 2-lot or a 3-lot and have a total, maybe a 4-lot, and have a total of $1,000 in risk, and then have a total of almost $20,000 in potential gains. And when you enter these in higher volatility, as soon as volatility starts to drop out of these trades, profit starts creeping in rapidly. So that's why when volatility is higher, these trades become even more lucrative and more interesting to get into. Well, as you should certainly be able to tell by now, the butterfly is certainly my main go-to trade that I personally use and the trade that I most often teach my students in my Trade Alert service. Mastering the butterfly and its various configurations isn't about adding another tool to your belt. It's about unlocking a strategic powerhouse trade that's proven by countless professionals. So embrace the butterfly and elevate your options trading to new heights. If you would like to see how I traded 5 different butterfly trades from start to finish, starting with a simple on and off butterfly, all the way through 4 more complex butterflies with increasing levels of complexity, I have an offer for you. In addition to that butterfly offer, I'm also going to share 5 calendar and diagonal trades with you, also range from very simple to more complex with a host of adjustments included. I often use these trades around binary market events like earnings, Fed announcements, etc. to capitalize in the spikes in volatility. In these trade examples, I'm also going to spend about 45 minutes showing a butterfly, a condor, a calendar, all traded live around the same company's earnings announcement. And I'll be comparing and contrasting those and show you how each one of those did and why some did better than others. So please check out this special offer, and thank you so much for checking out this brief tutorial.